Okay, can everybody hear me, please? Mic check.
Yes, loud and clear.
Okay,
Loud
thank
and
you.
clear. Loud and clear.
Okay, welcome aboard, everybody. This is Roy Weiser from Weiser Investment Services. We provide the investment advice for TSP tips and some other items there. But first of all, I've had this up on the screen for a little bit, and that kind of looks at the process of price. Basically, you have a lot of noise that always comes in, but at the end of the day, the market always closes and prices of the indices and the stocks that trade, they basically are stagnant then for the majority of the next half of the day, let's say, until the market's open tomorrow. Yes, they do have pre-market and post-market, but for the majority of the moves, everybody considers 4 o'clock Eastern time pretty much the end of the trading day. A couple good things that we'll be going through here tonight. This is the first screen. Again, I'm Roy Weiser from Weiser Investment Services. My daughter, Megan Cahoon, she also assists me. And we started TSP tips quite a few years ago, but we've also had ProFunds tips, which I'll talk about 10 minutes into the presentation, 15 minutes into the presentation. We're based in Virginia Beach, Virginia, and basically have enjoyed life down here in the Navy town. Just a little bit of my background real quick. Again, I always loved sports, baseball, football, track. I went to Naval Academy, graduated in 76, went aviation after I got married right afterward. Became a backseater in the F4 and F14, then got my my master's. Megan came around on the far left side. And then while I was still in the Navy, I got some of my investment advisor and brokerage licenses on the series there. Started Weiser Investment Services back in 1993, became a CFP, and then retired from the Navy in 2000. After that, went to NAVC, civil service, got a doctorate, and we opened up TSP tips. And then the daughter, she joined me about 7 years ago now, almost. And we just offered ProFunds tips about 2 years ago. I did it just because of the fact that I wanted to have something to go into after I retired from the Navy. So we built it, and a lot of friends and family are clients of our investment advisor business. Okay, 3 things that we want to take away from today, and this is what kind of has built our investment strategy, and it's encapsulated in those bullets. We feel that trending is an important thing. It helps you to get into the majority of the gains, and you're not going to get in at the very top. I mean, get in at the very bottom or get out at the very top. It basically is a trending market. So when it starts that climb up, then we'll get back in. And when it starts going over the top, we'll move money to the sidelines, put it in cash in order to minimize losses. We also use what we have, for those of you that have read our weekly updates, we follow a performance ranking, which we'll also be talking about tonight. First thing that we have here, this gets more into the strategies now. What we try to do is answer these 2 main questions. The first is where we want to be in the market, i.e., what fund? Is it the G, F, C, S, or I? And then when do you want to get into the market? Okay. Again, part of the trending. And we'll look at these 4 items, 2 of them as it relates to where, and then moving averages and candlestick reversals as to when to be in the market. So I've highlighted composite score because this is what we utilize with the TSP funds, the individual funds. So let's get into those a little bit now. And just to recap, these are the funds. Everybody should be familiar with those. I'm not going to labor a lot of time, except for that bottom row. And why I think that's important is that all those funds, they only get priced once a day, like every other mutual fund, at the close of the end of the day. But there's a lot of action that occurs during the day, from the time the opening bell at 9:30 until 1600. And those C funds and the S and the I fund, and all those individual funds in the top row there, they're just going to give you that end of the day price. So what we'll do with this composite score, especially with this 2-bar reversal, which I'll talk about in a bit, we use those underlying indices, and you can see where they are right there, the corresponding this corresponding underlying index for each of the different funds. Okay, moving on. So it's a composite score, and as such, we have composite signals. There's a total of 10 of them. They each have different weightings, and they each add up to a total score of 100 when everything is giving us a bullish signal. Okay. Tonight, like I mentioned, I'm going to touch on 4 of those items that are listed that have the verbiage in the signal column. And what I also wanted to make you aware of is that all this data tonight is as of last Friday. Okay. When the markets closed, I put together this presentation, really updated the charts. And you can see here that with that composite score, the EFA fund has a composite score of 100. Everything is giving us a bullish signal. And then the C fund and the S fund, using those underlying indices, they both have an 80 composite score. Let me just briefly jump in here too. If you do have anything, a question or anything, we're going to have question and answer afterward. But please go ahead as we go through this and go ahead and put it into chat. We're also going to make this recording available for you, and we'll send it out afterward to everyone that's signed up for tonight. Okay, so that's with the composite scores there. So it just builds on itself as it gets more bullish, and then this composite score decreases. And then when we look at it, we'll sort by the best composite score in order to determine what fund we want to invest, what TSP fund we want to invest in. Okay, so here's how it looks just for about the last 12 months here, since last October, November timeframe up until last Friday. And you can see at the top, it has the 20-day moving averages in yellow. The 50-day moving average is the blue line, and the 200-day moving average is the red line. And you can see when there are crossovers as it becomes more bullish. Over in this time at the middle of November, when the 20-day moving average crossed the 50-day, and then over here just recently in April, when it crossed below. And you can see how close it is right now. And actually, as of Monday's close, the 20-day move did move above that. And so as you can see how the composite scores run, looking at your the TSP Tips app on your phones, we have the history there. And this kind of shows you over here, the left screen says, of course, you have the top GFCSI. And you can see back in the October timeframe, we were about 95% in cash over in this time frame over here. As such, we started to move a little bit further at the beginning of November, November 4th. We shifted about 45% in. We built upon that. And then finally, around the 2nd of December, in this time frame, we went to 100% invested. And we've pretty much stayed 100% invested until one time, a little bit in January, we took some off the table. March, we took a little bit of off, but then we pretty much stayed fully invested in the CS&I funds until the middle of April, which is somewhere right around in here. Again, we went to move some into 35% into the G fund. Then we saw interest rates starting to drop down. We put some into the F fund. And then altogether, as of May 11th, at this time frame over in here, we moved back from a low of 55% or 45% invested in CS&I to 100% invested. Okay. Next, I want to talk about the performance ranking. This is what we use with what you call TSP, excuse me, ProFunds tips. And we also use the performance ranking at times when the composite scores are equal. So those that have a better performance ranking will go ahead and overweight them and let them have favor. And it's really not that difficult to perform, but it does require some spreadsheet mechanics and some different software. So I'll show you how we work it right now. Again, this is where you invest. And we'll look at 4 different returns on each fund within the family of TSP. And so what we'll do is we'll take a look at the 1-month return, weigh that at 40%, the 3-month, we weigh it at 30%, 6-month, 20, and then 12-month return is 10. And you can see in the dark blue box, if you did the math, where you had a 5% return over 1 month, it would give you 2, 10% in 3 months would give you 3, and so on to give you a performance ranking of 10. That's an example. Again, in the charts at the bottom, excuse me, in the table at the bottom, May 17th, you'll see here the blue, this is the return for the C fund, the S fund over those periods, 4 periods, and then the international fund. And I just highlighted it, those boxes, who had the best, what fund had the best return for each of those 4 periods. Then we do the weighting over here on the far right. It sums it up and it puts it in this order. So you could see on that previous composite score, both the C and the S funds had a rating of 80. They were real close to us. But this one is a little bit of an anomaly. That's why we use the composite score, because it's starting to have some nice returns as it builds over here. If you look at this closely, you'll see that the C fund had a 29% return over 12 months. We kind of didn't invest too much in the I fund, but we've taken more of an overweighting in that now as the performance ranking keeps on improving. Okay, now I touched it real quick, some of the moving averages that we have there that we utilize. So let's look at that a little bit deeper as we looked at about the last year or so. Okay, how did this come about? I called it the buying and hold calamity because if you look at that S&P 500, you can see it was 1469 at the end of December, at the end of 1999. At the end of 2007, it was almost the same. And you go forward another 6 years and 1472. Called it the buy and hold calamity because it was due to the fact that you had some very difficult times during the bear market of 2000 and then 2008. So let's look at that graphically on a chart. And here it was, December. You can see that 1470, it lost about 45, 50%, bounced back up just to where it was making almost a new record high. Boom, dropped back off, and then finally regained it. And this is usually what you saw in the past. We've seen different types of bear markets in the last 2, that being 2020 and then 2022. So, but that's where this came from. And it really gets frustrating at times when you get some money and then you lose it, because if you lose large amounts of money, it takes us an enormous amount of gains in order to get back to even. So what we've done, one of the things that we looked at was with those moving averages now, it tells you when to be in the market. This is just a simple crossover. You have in the pinkish color, the 50-day moving average, it's this one over here, and then the 200-day moving average. And when they cross is when you would get out of the market in order to go to the sidelines and minimize those losses. Okay, now you're in cash, it's flat. When it starts coming back again, crosses above, get back in and follow the trend, let the trend be your friend, stair step your way up. So when 2008 came about, get back into cash, and then back into the market during those 13 years of buy and hold calamity. Okay, so let's look at this a little bit more. Using those 3 moving averages, the 20-day, 50, and 200, you can see when you're in a bear market down here, of course, the 20-day is going to be above the 50, is going to be above the 20. And what happens then, the market starts to improve. As you go through here, it starts to improve. And first of all, you'll see the 20-day moving average cross over the 50, still below the 200. Then eventually it crosses above. Bullishness is building. And then finally, which is where we spent the majority of the last 10 months or so, up in this area, all the way from November of last year until the middle of April. And this is what it's building momentum. Let the trend be a friend until, of course, you start getting on this side. Conversely, just the opposite. You're going to have the 20-day move below the 50. It'll move below the 200. And then eventually the 50 will fall below the 200. And I call this the pushing a rope area, or catching a falling knife with bare hands. Okay, so here's how you have it over the next couple of bear markets. You'll notice over here with COVID, that was the fastest drop off, okay? It came down, and I want to point out that when we looked at that bull and bear 13 years buy and hold, this is when actually the 50 crossed the 200 over in here, right there, okay? And again, it made its bottom. So that's why at times you want to go ahead and start taking the money out up here when the 20 crosses the 50, and then when it crosses 20 crosses the 50, and then the 20 crosses the 200. You can also factor in prices in these things and say, instead of me taking it in a 3-step kind of area, we can add price in and try to get out a little bit earlier. And I'll show you how that accomplished. Over here on the falling knife side, you can see at the beginning of April in 2022, how the market started to fall off. And I read some of the weekly highlights that we put out, the weekly updates. I mentioned that in this time, it was like Charlie Brown and Lucy, where it kept on pulling the football out as Charlie Brown goes to kick the ball. And that's what it was kind of like over in this time frame. So it's very hard. You don't know when the next football is going to be pulled out, but eventually you'll start to see movement back up, and you can see how it started to consolidate up here at April of back in 23, excuse me. Okay, just an example over those two different bull markets and bear markets. Okay, so from November 23 to present, again, this is just the 20 and the 50. And then you'll see the crossover here back in November, about mid-November. And then just about a month ago is when the cross back under the 200. Now, as of Monday, it has popped above it again. So again, contributing to more bullishness, and you'll see the upward trend as we're moving into there. Next slide I would like to talk about is candlesticks. This is the other component as to when to be in the market. And this is where we use those underlying indices, which is really interesting how it all works out. I found that you can use this 2-bar candlestick reversal for pretty much not just the TSP funds, but for stocks and different instruments, futures, things like that. So let's get into it now. A little bit of this is that same period. The last one was a daily chart. This is a November the present weekly chart. And you can see over here, it says 1 week. And that kind of ties into what the S&P 5, the TSP is. We all know that there's only two restrictions. There's only two transactions you can make per month in most cases. But this looks at, instead of a daily basis, like the other one chart, this looks at as a weekly. Now, how does this work? Here's the basics right here. Basically, if it's a green bar for the week or for the day or whatever the time period is set, if it's a green bar, the market opened at this spot and it closed higher. Okay. So this is what it was at the open. This is what it was at the close. Now, if it opened up here and it dropped down, this is the lowest point of the day. Conversely, if it continued to go up, reach the high point, and then drop back down, these are called wicks. So it shows you the total movement from the low of the day to the high, and the green bar corresponds. It says the close was open, the close was higher than the open. On the bearish candle, it's pretty much the same thing. It lists the high and the low for the day. However, the open is higher than the close. So it's just the inverse, really. When the close is higher than the open, it gets a green bar. When it closes lower than the open, you get a red bar. Okay. Now, so where does the 2 bar come in? So what I always do is I take a look at these last 2 weekly red bars down here. And I want to set at the high of the last 2 red bars. Okay. The top of this wick. So I'll draw a line over here. And when I see an improving day, a week over here, because it's green, but during this second up week, at some time, Monday through Friday, at some time during the week, the price crossed above the high point of this 2 bar, two of the last 2 red bars. So giving us one of those buy signals in the composite score, and it just keeps on moving up. And what you would next want to do is sell at the low of the last 2 green bars. So if you imagine the next week goes by, you'd set it over here. Then next 2 green bars, you'd keep on moving it up, looking only at the last 2 green bars, looking at the last 2. And then you get over here, it keeps on going up till it hits a peak. And if you look at the last 2 green bars, the last 2 up weeks, you set a low, a sell at the low of the second green bar, the last 2 green bars. So you can see it gave us a sell signal over here, but then came right back with a new buy signal up here, because this was the high point of the last 2 red bars. And then we pretty much stayed in there until we got to the beginning of April, around in that time frame, and set the sell at the low of the last 2 green bars. So we got out here with that signal, and then we looked again at the last 2 red bars and came back in over this area when it crossed above this. Okay, so those are some of just an example over the last few months there, or 10 months or so. Now, I told you about that 2020 COVID bear market, where moving averages are typically a little bit lagging, okay? But this can help you up. If you look at it from COVID again, from a 1-week perspective, if you look at those last 2 green bars, it crossed it over here at the S&P at 32.14. So that would have been a sell. And then over here, you look at the high of the last 2 red bars, and you would have gotten in at 26.41, which basically mitigates that loss of about 600 points or 20% there. The other thing I said, you can use, again, this is the S&P, the underlying index. But if you ever wanted to use this on your own brokerage account, or if you have a retirement account that has access to the SPY, which is the ETF, that matches the S&P 500. An easy way to do this is to look at it once a week and set a this would be a sell market order. So when you look at the number 3214, if the price goes below 3214, it will change your order to it will activate your sell, and you'll be getting the price at market order. So you can set it at the weekend, let's say, and if it happens to go below this price, you're covered. When I invest with stocks, all the stocks that I go into, they either have buy stops or sell stops to preclude an exorbitant loss with such downward force like we saw in COVID. Okay. Okay. This is just an example of how you can use it on a stock. This is a 1 day interval. A lot of this all depends upon how often you want to take a look at your different stocks and take a look at it from here. But you can see how this is like the middle of April, AVAV, 2 red bars. You come across, it's about 150. And as of Friday, the sell stop was at about 190. So you would have gotten in at 150, 190. This hasn't hit the sell stop yet. It's still in an upward trend. But one quick way to do it, and you can do that for some stocks that you like. It's just your personal interval. That was on a daily. This is the same stock over here, but it's on a weekly basis. Last 2 red bars. Instead of getting in at 150, you're getting in at 123, and then out over here, in, out. This is still on an upward trend. Again, it depends upon your timer interval, how much time you want to devote to it, and how much, if you like to do that. Okay, so let's talk about ProFunds tips real quick here. This is where we use leveraged funds. And with the TSP, we know everybody has classic funds. The C funds, they're all 1-to-1 ratio. But with the ProFunds, they have ultra tips. So what this means is that whatever return of the index is, these funds are going to get twice the return. And we have 2 models that consist of 4 funds when fully invested, and then sector tips, which is a combination of 2 times and 1.5 times. And we look at 10 different funds. We'll look at this a little bit more. We also utilize when to be in the market. Okay. So we have the performance ranking, when to be in the market. And then because on these, some of them have 1.5 to 2, we're not going to wait for that moving average to come around or anything like that. We're going to go ahead and set a stop so that if it hits 2.5% loss after a purchase and it goes up, whatever that high point was, if it falls 2.5% down, we're out of that stock. Over here, out of that mutual fund. Over on the ultra and sector, we just double it, so it's a 5% circuit breaker. And how does that fall in? Let's just take a look at this. Price, well, we use on the ProFunds tips, instead of the 20-day moving average, we use the price. It's price, a 50-day moving average, and 200. And then if the PR, the performance ranking, is above 15, it gets an A. Over here, a B, C, D. This corresponds over here. So let's say we're looking at the sector funds, 10 funds. When we would max it out, it would be 10% per fund. So basically, if you had the price above the 50 and above the 200, and it was grade A, you get 10% allocation. This is 9.8, 9.6, 9.4, and 9.2. When you're up in this area, really, you're only going to stay with the A and B funds, okay? Grades. And then over here, if it was going up, this is a 10, this is 9, okay? And each of these different blocks has a corresponding amount. So you take a look at that, match what the performance ranking is where it is in relation to, where it is in relation to, let me get back, where it is in relation to the moving averages. And then you'll go ahead and let you know what the allocation should be for that. Again, that 10% was just for the sector funds. Okay, now we'll take a look at how it works. As of here, this is the most recent when we got out of all the equity funds and put it all into cash. You can see it was the 16th of April. Of course, probably the market was moving down. And the nice thing about this is that there are no trade restrictions. You're not stuck with 2 trades per month. This you can do everything in one day, the next day, no problem at all. And there's no transaction fees. But you can see here, this is what we'll send out. And it will look like this. Okay, we went to the 1-to-1 ratio. This one had 4 funds with a 2-to-1 ratio. We went 100% in cash. Over here, we increased our cash allocation by selling Ultra NASDAQ 100, Internet, and Technology. And we pretty much stayed that way until the 2nd of May. This was the last day that we kept it in 100% cash for these 2 models over here. And you can see the sector model, it had 71%. And notice some of the funds that you have in here were banks, rising rates opportunity. This is a fund that goes up when rates go up, and utilities. So it's not like technology at this point, okay? But we have been there. Okay, so this is the 2nd of May. Next thing we do, all of a sudden, we start getting some buy signals on the 3rd. We go up, we decrease our cash from 100 to 30, put about 70% over here. This is on the 3rd of May. Actually, on the 4th of May, this went up to about, the Ultra tips went up to about 40%, went down to about 40% in cash. And then over here, you can see some other funds that we added. We also invested in the Ultra Emerging Markets and the Ultra China funds. Okay. Now, how does it look now? Okay. Black Friday, these were the performance rankings of the top 10 sector funds. And you can see here, semiconductor had a performance ranking of 45. I sort these things. I pick out the top 10. Usually I follow about 46 of these funds. Semiconductor ranked at the top. 20 was above the 50. 20 was above the 50, was above the 200. And it gave me that 10% allocation. Ultra China was in that 2nd block to the left. It didn't hit the very top, so we gave it that 9%. Everything had a grade of A. So that's why you see everything had a grade of A, and pretty much everything except for China had the price above the 50, above the 200. And those are the ones we get invested. If something comes in and knocks it out of the top 10, then we'll go ahead and replace it and put the other fund in there. And so this is what it looked like, excuse me, as of Friday, which we came about. And here we are, pretty much fully invested. You can see there in the classic funds, has a lot of growth. NASDAQ 100, NASDAQ 100's at the top of the ultra funds, the blue fund in the middle. And then you can see the different funds that we have on the far right. Pretty much fully invested except for that 1% in the Ultra China fund. Again, no trade restrictions, which is a very good aspect. This is how it looked like during those 2 COVID periods. And what I want to point out, excuse me, those 2 bear markets in COVID, you can see the flat line says that you're basically in cash, okay, in the portfolios. And then over here in 2022, when we had the falling knife, a lot of the times in this ultra fund, we kept it into cash also, okay? This is how it looked during COVID again, just taking a snapshot of it over there. And this is how we wound up in 2020. Okay. So what I want to do is that in summary, I gave you a little bit of an idea of how we figure out where we want to be in the market with the composite score for TSP performance rankings on the other different TSP, excuse me, ProFunds tips model. And then down there, when to be in the market for the moving averages and the candlestick reversals. Now, this is another little thing that I stuck in there just to see how you can use the 2-bar reversal. Everybody's probably hearing everything about NVIDIA. It's one of the best performance stocks of this year. And then plus tomorrow after the markets close, it gives its earnings shot. And you've probably heard about it all in the news this week because it's one of the last big mega tech, mega cap tech stocks around. And you can see here that this is the 1-day interval. Actually, NVIDIA crossed on Monday, yesterday, the 20 average going above the 50-day average, okay? The other thing that you see here is that the reversals. Here was the sell reversal would be down in here at the bottom of this green tick line. So it's actually a pretty nice time that you might want to consider going ahead and putting some money into NVIDIA. It looks interesting. You can see the crossover over here at the far left. It's pretty much maintained, had nice, if you want to go through, you can look at that and see where the 2-bar reversal is. When it came down over here, the 2-bar would have taken you out. But yeah, they had a great earnings and you get back in. Okay, so that's about it that I have. I spent about 35 minutes here going over this. So what I'd like to do is now, do we have any questions or anything? Okay, my daughter Megan is right next to me, so we're going to check the chat here real quick.
Okay.
Can anybody see me on the cameras?
Yes. Question is, I am not a fan of mutual funds, but would sign up if you did this with ETFs, like ProFunds tips?
Well,
ETF tips.
actually, this is I'm more familiar with the ProFunds. I started investing back in, I think it was 95, somewhere around there, using ProFunds. I used to use Ridex, and I used to use Fidelity Select, but I found ProFunds to be much more accommodating. I'm trying to think. ETFs, what I would recommend, it's something that we can take a look at, but it requires a lot more work from you in order to go through it and set new stops on a daily basis. Let's say if we put these things out. The reason I like it so much is that we're trying to make you fish at times. It does have utility, but it does require, I can't go in there and go ahead and move the stops. So it depends upon demand. If we got a lot of demand, we might be able to do that with the ETFs and not mutual funds. But if you look at the ProFunds, just look them up a little bit. Go to their website and look at some of their funds and plug it in there and see for yourself what you want to do with that 2-bar reversal. The good thing about the 2-bar reversal with ETFs is that you can set the stop. That's an important feature. And I use a lot of ETFs in my own personal trading account. Specifically, I'll use leveraged ETFs, such like NVDA has a 2x ETF, which is NVDL. Google has a 2x ETF. Bitcoin has ETFs. And pretty much ProFunds, they have Pro Shares, which also are ETFs. And they have, the biggest one they have there is the NASDAQ 100, the triple Q, which is 3 times to 1, 3-to-1 ratio. So I'll check it out. and if we do have the demand, it might be something we might offer. But I appreciate the question.
Okay, how do you invest to use the ProFunds tips?
How do you invest to use, okay. Investing in ProFunds is very easy. What you would do is that just go to the website. You can set it up as an individual account, taxable account. I personally wouldn't involve, I would personally recommend that if you're going to set it up, you use a retirement type of account, such as an IRA, or do a rollover from the TSP. And the reason I say that is because most of the trades that you're going to have are short term, and you'll have problems at the end of the year with wash sales in taxable accounts. So I would structure it more for tax deferred types of accounts, or tax free, such as Ross. As you can tell, I'm a little bit older, so I've really liked the ProFunds and the tips, ProFunds tips. It's the exact same thing I use with my clients. In fact, with my individual clients, I use a 50% weighting of the ultra and a 50% weighting of the sector in order to even things out there a little bit. But I consider the TSP is difficult with the 2 exchanges per month. It didn't used to be that way. So as I approach retiring from civil service myself, I'm going to go. I've already started moving money on a periodic basis over to ProFunds.
So this builds on it. I'm retired and not familiar with the ProFunds. I no longer have money in the TSP. How do I invest in them? So
okay, so getting back to the investing, you just open an account with ProFunds. And if you wanted to do an IRA, you fill out the application, and then you do the direct rollover form. I always recommend moving the money from, let's say, Fidelity Direct, or I've done it, let's say, from TSP direct to ProFunds. You'll have your account. What we do is we send out that we have a website where it's posted each day. You'll go there. It'll be posted somewhere in the morning, no later than noon. And then you just go to your account, and they have a menu that drops down, similar to what you saw there, different colors, but it'll have your funds from the day previous. And then if there's any change from the previous day in either allocation or buying a new fund and selling one, you just go ahead and switch those out. It's done in, like, I'd say the whole effort would take no more than usually 2 minutes or something like that. And I think ProFunds is at www.profunds.com.
yeah.
Okay.
All right. Let's see.
Anything else? Let's check chat.
Do you happen to have any performance charts of TSP tips recommendations versus life cycle funds?
You can take a look at it. You have to understand that the life cycle funds are a combination of the C, S, and I funds. Okay. And how it works is that, let's say, I'm going off the top of my head, but let's say the next life cycle fund that matures basically is the 2031. And then they'll stop using that fund. Of course, it's for those people that are going to retire in the year 2030. And they'll work it so that it's based upon your age. So you might have either a 70 or 80%, don't quote me on that, but there's a much higher percentage, which is basically equal to your age. That's where they get that. A lot of times people use that in the brokerage field. Take your age and put that in cash. And then you'll only see, let's say, maybe 30% invested in the individual funds. And that might be, 20% in the C fund, 10% or so in the I funds, or excuse me, S fund, and or 5 and 5 in the I and S funds. And that's how they work that. Conversely, if you're just starting out and you're 20 years old, they're saying you should only have 20% in cash or less, and then the remaining will be split pretty much, evenly between the remaining 80% would be split accordingly. And that might be the life cycle fund for, 2060 when they reach their retirement ages. Okay, so that's how that works. Of course, the more cash that you have, the lower your return is going to be. It's all risk and return. A lot of times you have to look at it and say, do I want to take this risk, or do I have enough to live on it and be happy? And those are your individual. I always call it your retirement number. What is your number that you want to be, so that you can generate, let's say 80% of your retirement salary. Don't forget also with your retirement, and you have some of you, I'm sure, will be getting closer to start being able to be eligible to say take Social Security. Then you have to balance that with other assets that you have. So it's really, that requires you to do a little bit of manipulations, but on average, the life cycle funds will not perform as well as the individual funds in a bull market because they have more money in cash. Okay. Long answer to a straight question.
I saw recently the iFund is changing to the MSCI
Mhm.
ACWI. What impact will this have on the iFund?
No, it'll be almost transparent to you, because one day, they'll do the switch. They'll probably do it, and instead of the underlying index being the current one, they're going to switch over, and it'll all be reflected in the whatever the net asset value is of the iFund on that day. So they'll make sure that all the calculations are done, so that they'll give you the performance of that new underlying index. But you're not going to have to worry about anything on your side, because that'll all be performed automatically for you. And they'll probably come out with more and more information as we get closer and closer to the switch.
Okay, this last one. Where I'm retired, I still get your tips, but pretty much leave my funds at about 80% G, 20% C. I have maintained my principal while withdrawing about 5K per month. Seems to be working without a lot of risk. What are your thoughts?
So, Roy, I'm retired, so get new tips. Well, that kind of goes back to what are your goals? To me, if I had, a considerable amount of money, where I'm just going to use a round number. Say your retired salary is 100, just because that's easy to do the math, and you want to be able to take home 80% of that a year, 80,000. Then you have to have, you have to offset it then by Social Security that you're going to get. Don't forget you have FERS that's coming in. And then that other piece, how much do you need in the bank? Let's say you had 100K, your Social Security was 25, your FERS is 25, so you need $50,000 a year. So at about a 4 to 5% rate of return, that's how much you need to generate. Because I think you said you wanted to pull out
5K a month.
5K a month.
Mhm.
Yeah, again, that gets back to, 5K is, if you have $1 million, 5K a month is not bad. If you have 50,000, 5K a month isn't going to last. So again, you have to look at the numbers from a more of a systemic event. So.
All right. I received word today that we are no longer limited to one withdrawal a month, since we can do it electronically on the app. So hopefully they will lift the 2 trades a month restrictions as well.
Yeah, that's just a withdrawal. And I understand that. I just saw that come across my desk also. But yeah, I wish they would just go back to the old days where you could pretty much, they allowed you to trade, every day. And I ran it just like I did, let's say ProFunds tips. It's frustrating at times. And that's one of the reasons why I've moved this, pretty much the majority of my TSP funds into ProFunds, because of that flexibility. Okay.
That's all the question.
And that's it. So anybody else want to speak up or anything? Have any comments? And one last question.
Right. so they can go to.
Yeah, I have one question.
Okay.
Mike Marshall from San Antonio again. I've been using your TSP tips from, a few years, even like when I was a civil servant until I retired. I've been retired for like
Mhm.
coming up on 5 years. And once you retire, you can't contribute money, but
Right.
your TSP tips have helped me help my money grow substantially. So, I just want to say thank you.
Okay. And let me just, on a final note there, I appreciate that. But on a final note, we get questions at times. Well, you're going to do this for, my wife has a 401k or something like that. Or I have a brokerage, an old 401k from when I was a contractor. Usually the TSP only has those 3 individual funds. Okay. Usually a 401k program will have more than 3. Let's say they might have 2 dozen or a dozen. And within that family of that 401k, they probably do have some index funds which mirror, let's say, the S&P 500, a small cap fund, and then mirrors the EAFE or whatever the international index is going to be. But they'll have some kind of broad international fund. So you can actually use TSP tips within your 401k if you do have one, or a different 401k at Fidelity or Vanguard or wherever. Use them across the board if you'd like. That's your call. But I just wanted to let you know that that's a way that you can use TSP tips for other non-TSP accounts. Over.
All right,
Oh.
this is the last one. I came in late. What are ProFunds? I seek more trading days. Thank you.
Okay. Why don't we do this? I'm going to give everybody my phone number here, 757-636-0632. And if you're signed in, we should have your email. We're going to send you, we'll send you a link to the recording. But if you have any questions at all, please give me a call. I always love talking investments with people. I've been doing it for many, many years. I enjoy it. I got my daughter working with me now. Probably have her on the background there, helping me out. But it's a good thing.
What websites can they go to check out everything?
The website that you want to go to ProFunds, it's www.profunds.com.
And then ProFunds tips.
And then it's called profunds.tips. Okay. If you want to get to the tips.
And then wiser investments too.
Yeah. And Wiser Investments. If you Google for any of these things, you'll find Wiser Investments, profunds.com to the actual ProFunds group, and then profunds.tips to bring you the ProFunds tips. Okay. Okay. And I see here Justin saying we'll send out an email with the link to the recording in the next several days, and we'll incorporate some other information, all the links.
Yep.
Okay. All right, everyone. Well, have a good one. I enjoyed talking to you, and everybody have a great Memorial Day weekend. Okay. Bye. Thank you.